Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates and digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic. Bringing you updates every day at noon and 7 p.m. Eastern Standard Time. Just a reminder, ladies and gentlemen, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Stay with me because this is information nobody else is connecting yet. Before we break this down, I want to thank everyone who takes the time to like, subscribe, comment, and share these videos. Your engagement helps get this information in front of more people. Your support allows me to keep bringing these deep dive, high-value insights to the crypto community. All right, welcome back, ladies and gentlemen, to another episode of the Crypto Republic. Today's video is not about hype. It's not about price. And it's definitely not about XRP is pumping tomorrow. Today is about structure, because something happened recently that has a lot of people excited and just as many people confused. JP Morgan, Ripple, a treasury platform, and a lot of assumptions flying around social media. So today, we're going to slow this down, connect the dots properly, and answer the bigger question about XRP that most people are completely missing. Because what's happening right now isn't loud, it's quiet. And in finance, the quiet moves are usually the ones that matter the most. Let's start with something very clear. Yes, JP Morgan is working with an entity that is now owned by Ripple. That path is factual. But no, XRP is not being used today in this workflow. And that statement right there is where people either panic or misunderstand the entire play. Because institutions don't flip switches overnight, ladies and gentlemen. They build systems in layers. And if you don't understand how banks modernize infrastructure, well, you will always think you're early or late at the wrong times. What we are watching right now is not a payment event, ladies and gentlemen. We are watching a plumbing upgrade. And if you need a historical frame for this, think about railroads. Before the first train ever carried passengers across coast to coast, there were decades of work laying tracks, standardizing gauges, and connecting regions that had never been connected before. No one made money on railroads when the steel was being laid. The wealth came later, when commerce could finally move at scale. Right now, what we are watching is not the train. We are watching the rails being aligned. They are also a reason banks move slowly. History is full of institutions that moved too fast, adopted technology before standards were ready, and paid the price. In the early days of electronic banking, several regional banks rushed into proprietary settlement systems that couldn't talk to anyone else. They saved time, briefly. Then globalization arrived, and those systems became liabilities instead of advantages. Modern banks remember that lesson. That's why they build foundations first and liquidity last. And this isn't coming from a junior analyst or a marketing team. This came directly from a senior managing director inside JP Morgan who has spent years inside the FX Treasury ecosystem. And before JP Morgan, worked at another bank, U.S. Bank, specifically on transactional foreign exchange for corporates. The background matters because this is the part of the bank where global money movement actually gets designed. This is the acquisition people overlooked. A while back, Ripple acquired a treasury and cash management platform. A platform designed for corporate netting, liquidity visibility, and internal settlement optimization. This wasn't a flashy acquisition, no memes, no countdown clocks, but it was strategic. Because treasury systems sit upstream from payments. Before money moves globally, before liquidity is tapped, before bridges are needed, corporations first clean up how obligations are calculated, netted, and reconciled internally. That's where this platform comes in. And recently, JP Morgan publicly acknowledged a partnership to integrate payment and FX capabilities with the treasury system. From a multinational industrial company, Franklin Electric. This is a real enterprise, real balance sheets, real intercompany settlement obligations. And the result? Lower transaction costs, cleaner internal settlement, improved efficiency across markets. And that's not speculation. That's operational improvement. This is where social media ran wild. JP Morgan is using Ripple. XRP is live. This is it. No, blah, 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 blah. That's not how this works, ladies and gentlemen. Why XRP is not used yet and why that's okay. Let's be very precise here. Netting systems do not require a bridge asset. Treasury efficiency does not require XRP. Internal settlement inside a closed system does not require neutral liquidity. And that's the point. You do not introduce a bridge until fragmentation exists, ladies and gentlemen. And right now, what banks and corporates are doing is cleaning workflows, improving visibility, reducing friction, preparing systems for scale. This is step one. If someone tells you XRP must be used at every stage, they don't understand banking infrastructure. XRP is not step one. XRP is step three. How banks actually scale, ladies and gentlemen. Here's the part most people miss. Institutions don't modernize by jumping straight to global liquidity. They follow a sequence. First, connect systems. Second, optimize internal flows. Third, tokenize balances. Fourth, move across jurisdictions. Only at the fourth stage does the liquidity problem explode. Because once value lives on different systems, different ledgers, different jurisdictions, you don't reduce the need for liquidity. You reduce it. Fragmentation creates demand for a neutral bridge. That's where XRP lives. And this isn't theory. This architecture has already been outlined by global financial bodies, by international settlement institutions, and by the organizations that design how money moves at scale. This is documented system designs. Another useful analogy is SWIFT. When SWIFT was introduced, ladies and gentlemen, it didn't move money. It moved messages. But by standardizing communication between banks, it quietly became one of the most important pieces of global finance. XRP is not trying to replace messaging. It's designed to solve the next bottleneck. Settlement across fragmented systems. Messaging came first, liquidity came later. The structural alignment. This is what I want you to focus on. Not price, not timelines, structure. Ripple didn't buy a treasury platform for headlines. Ripple didn't invest billions to impress retail. They deployed multi-billion-dollar capital into infrastructure that sits before liquidity. That's not speculative behavior. That's institutional behavior. Think about the internet in the early 1990s. The internet already existed, but there was no Amazon, no Netflix, no global e-commerce. Why? Because payment rails, logistics, and trust systems hadn't caught up yet. The infrastructure came first, the value capture came later. XRP sits in that same historical position, not as the website, but as the payment layer the websites eventually need. When you see treasury modernization, netting optimization, and tokenized internal balances, you are watching the foundation being poured. Liquidity always comes last, always. Well, ladies and gentlemen, I'm sure everyone's waking up to seeing the news. I guess Maduro didn't trade with a stop loss. He got cut up like sushi and carried out in a body bag. You know, yesterday we were talking about this in the office about how, the paper silver in COMEX, as they raise liquidity requirements, money's going to flow out of that trade and it's going to seek the next underappreciated asset class to go into. And as we were talking about in yesterday's video, if you watched yesterday's video and also in the Patreon chat groups, we were talking about this, blockchain, cryptos. January 15th, we got the clarity up in center on deck. I don't like when we have dates per se, lines in the sand, because it's normally, buy the news, sell the event. But what we believe is happening, and we were talking about this in our Patreon, and thank everybody who's signing up. The link is right there. We have different versions of this. Please come and join. And if you're looking for more tips from the pits or actual intelligence for trading signals, we have that as well. We have something for everyone. What we believe is going to happen, and we were telling clients yesterday in Singapore, is this. And this is not financial advice. This is just my personal opinion, okay? This is not financial advice, okay? Sumatra black coffee. We believe they will pop the trading bubble of silver that's paper, not the physical in Shanghai. That's a totally different chasm right there. It's a totally different beast animal. They will stop the paper trading action in the U.S. trading and force that money into other assets, okay? So if you're on a prop desk, you're going to find whatever assets moving so you can make your numbers for the week, for the month, and for the quarter. So what happens is they take the pressure off the silver trade and metal trades, right, in New York trading times. That will go into other assets. And the only other asset, in our opinion, right now that's so undervalued is blockchains, okay? Whether that's XRP, that's XLM, that's HBAR, that's XDC, that's ADA, okay? That's all of these, right? Money's going to flow into this because prop traders have no loyalty. They're just trading. They are not investing. They are trading, and they're using charts to capture alpha. So when we were saying this, we watched XRP go from like $1 and change, $1.85, shoot to like 220, 230 and pull back. So anybody who thought this was going to be a dead cat bounce, that went out the window. We have different, confirmations on charts right now, right? So it seems that people are going to be very late to the party with this one. And it's always amazing that human psychology, they don't want to buy something when it's priced this way. They think it's going to be lower. And you say to yourself, how much lower is it going to go for you to want to take an allocation for yourself for the future, right? Then you're going to turn around and puke when it's $2.25. I'll wait till it's $2. Then it's going to be at $2.70. I'll wait till it's $2.25. Then at $3, I'll wait for $2.50. Then $3.40. I'll wait for $3. It's amazing. The psychology of the brain when it comes to in trading and investing is so different. It's like having, different species talking to each other, right? So my point being is this, right? Why we always compare XRP to the oil, because this engine of this financial system that's being built, you need XRP, you need the oil. XRP being a neutral bridge is going to connect a lot of dots. And believe me, they're putting points on the board. They put their head down to the grindstone and they're just grinding that puppy out, grinding that puppy out. And they just keep making acquisitions that is spectacular. So now if you want to look at this, how the world is waking up to something that's so different economically. See, Cuba's going to be the next to fall. And why this happens is Cuba needed cheap crude oil. They ain't getting that anymore. That's done. Thank you for playing. That's going to fall, right? Now you see everything changing. If China don't have access to cheap crude oil, they have a big problem. We have chaos right now in Iran, in the Middle East, okay? Now, coming all back to this is a very exciting start to the quarter of this year, and a lot of things are going to change. You can't expect to attack the U.S. financial system and think that this Medusa, this beast isn't going to, Hydra's not going to hit you back. I love when people sit there and they write off certain things. It's over, ring the bell, put him in a body bag, do this, that. I mean, like, seriously? But at the end of the day, when the Gucci clarity comes in, and I need you to get that frosty beverage right now that you have in your refrigerator. Why I'm saying frosty beverages, because it's going to be a long, cold, hardcore march to the end for XRP, which is going to be spectacular, okay? And you're going to have to stay frosty with this because it's going to be very cold and an upward march. But the view from the top of the mountain is spectacular, okay? And again, as the margin requirements are raised on all the metals and the CME, traders are going to take their money out of that, and it's going to flow into other assets that have smaller market caps or whatever that is, and it's going to push them up because they just want to make their numbers. And that is something that if you're a chartist, you can use. It's explaining the charts. See, I got guys in the office, they're surgeons with charts. I like to explain why the chart's going to say what it's going to say before it's going to go there. And it took me a long time to be able to look at a chart and say, we're going to be over here because XYZ. When you apply the macro thoughts of what's happening and the velocity and the movement of money, another thing, Jesse Livermore, movement of money, you can see where it's going to go and why, because everyone's bucket of alpha has got to be filled up. And guess what? What you don't understand is normally what happens. I learn something new every day. And what I don't understand is how people don't see how good XRP is and undervalued right now. But as the remora underneath these great white sharks, it's amazing the meals they just give to us. You got to sit there and say, thank you. I'm going to go clean your teeth right now. Don't worry. So again, XRP is going to begin to start moving higher. The other cryptos are going to begin to start moving higher because money's flowing into them now. And all of a sudden, the psychology is people think they've lost the boat. They've missed the boat. They lost the boat. They missed the boat. You always see these videos of people running, the phone is hysterical. Someone would sooner videotape a person being eaten by a shark on vacation than helping him. Or, I don't know why people like to video human misery. It's just, I have no idea. Maybe it's some kind of outcrop of Jerry Springer. Who understands why? But this can be the scene where you see someone running to their cruise ship. Don't leave without me. Don't leave without me. But at the end of the day, the most important thing is people are going to be sick as the ship and the plane start leaving without them. And that's why I say don't have discussions online, don't have arguments online. Just figure out what's good for your own plan for yourself, because a lot of exciting things are going to happen, right? So as far as we're concerned, these sub $2 levels are not going to last much longer. Okay, they're just not, because as they pop and they take the margin requirements and they take out the ability to be in these other crowded trades, they suppress the price on purpose, and money will go into other assets right now that no one's been touching right now. Boom, move higher. So if you want more of these discussions, come see us on Patreon, okay, and tune into other videos. But I said this in last video, okay? And also, I'm going to shave once I feel better. So for everybody who wanted to see this, this is growing. The why question, XRP. Let's answer the question directly. Why isn't XRP being used directly right now? Because the system is not ready to need it yet. You don't pour gasoline into an engine that hasn't been assembled. And let me say this clearly, because this matters. XRP is not the software. XRP is not the treasury tool. XRP is the neutral settlement layer when systems cannot settle with each other. Another way to think about XRP is an oil in an engine. I always say this. Oil doesn't replace the engine. It doesn't tell the engine where to go. But without it, friction destroys performance. XRP doesn't replace banks. It doesn't replace treasury systems. It reduces friction when those systems need to interact at speed and scale. You do not need XRP when everything stays inside one bank. You absolutely need XRP when value must move instantly between fragmented systems, without pre-funding and without jurisdictional friction. That world only exists after this phase, the liquidity flywheel. Here's where this gets interesting. As more institutions build on the XRP ledger for tokenization, issuance, settlement logic, liquidity attracts liquidity. Liquidity attracts settlement. Participants don't come empty-handed. They bring value with them. And once liquidity exists, more participants follow. That's the flywheel, not speculation, utility. And when liquidity must move between systems, stablecoins fail globally. Bank money fails neutrally. And pre-funding fails at scale. We've seen this movie before. The euro-dollar market didn't exist because regulators planned it. It emerged because global trade needed dollar liquidity outside U.S. borders. Systems adapt when value needs to move. XRP represents a similar adaptation, but native to the digital era. Let's talk about human nature and misinterpretation. Now let's talk about something very uncomfortable, human behavior. Every cycle, people dismiss infrastructure work because it isn't exciting. They want the result without watching the build. That's why I say the titles we have, they're not very exciting, but this is what you need to know, in my opinion, okay? They see treasury announcements and assume either everything is fake or everything is live. Both are wrong. The phase is boring, quiet, methodical. Every major infrastructure cycle looks boring while it's being built. Roads, power grids, fiber optic cables. Nobody gets excited about trenches until everything runs on what's buried inside of them. Later, when outcomes are obvious, those same people will say, it came out of nowhere. It didn't. You just weren't watching the foundation. Here's some long-term expectations. Let me be very clear about expectations. This is not a sprint. Rebuilding global financial plumbing takes time, governance, and coordination. If you're expecting overnight miracles, you will disappoint yourself. But if you understand that global settlement requires connectivity, tokenization, fragmentation, neutral liquidity, then the valuation, conversation changes. Not because of hype, but because of necessity. Systems don't care about opinions. They care about function. Here's the bigger question answered. So what is the bigger question about XRP, ladies and gentlemen? Isn't it being used yet? The real question is, what happens once everyone else is ready? Once balances are tokenized, once obligations are netted, once systems are connected, what settles value between them? The answer hasn't changed, and the fact that we're watching the early layers go live is exactly why this matters. Quiet progress beats loud speculation every time. History rarely rewards the loudest voices. It rewards the people who recognize patterns early, not because they guessed prices, but because they understood processes. And the processes unfolding right now has happened many times before, just with different tools. So with that being said, I'd love to hear your thoughts. Do you see the structure forming, or are you still waiting for noise? Do you think this march is going to be very long? Are you ready for it? Do you have the Gucci clarity? If this helped clarify the bigger picture, make sure to like, subscribe, and share this with someone who's confused right now. Because history isn't loud when it's being written. It's quiet. And we're living through it, and I appreciate every single one of you. I'll see you in the next episode. Have a great day always. Stay emotionless and watch XRP closely. This could be a defining moment. This content is for informational entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise. Well, XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to Crypto Public. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic.